particular department
is that
is the principal
employee contracts,
body
like in
that is responsible for the enforcement
are very critical
and collection
central
of customs
in terms of
duties in the country.
the agreement between the employer and employee.
Customs duty is
and when it comes to employee contracts, these ones are agreements that may be entered into orally or in written between an employer and an employee in relation to terms of service. So control employee contracts department.
The overarching framework, the laws are governed, or they are we get the laws from the East Africa Customs Community Customs Management Act, but it is administered by KRA through its Customs and Border Control Department. So the customs duty
with our
is levied on goods imported into Kenya,
under the manifested
with the core objective being revenue collection for the government and the protection of domestic industries. So the amount of customs payable is determined by several factors.
Human resource,
the amount of customs paid is determined by several factors. Payment of customs duty, the amount is determined by several factors, one being the customs value
that are managed in an organization.
The customs value
in human
this
resource management
is generally based on the price paid or payable for the imported goods, including the cost of the goods, insurance, and also
human
freight.
Resource records management process.
So the value
involves
of the goods
the
determines the customs duty or taxes to be paid. Then we have classification of goods.
So four very crucial things: creation, use,
classification of
storage,
goods.
Retrieval
Goods are classified
of records that
using the harmonized
to
system,
human resource
what we call
activities
HS.
in an organization.
Goods are classified
so various human resource
based
activities, as we shall
on
see the uses
using the
of these
harmonized
records.
goods code.
Now these records
using
are
the harmonized
crucial
goods
in decision
code.
making.
The HS
Crucial
code.
in
Classification is
decision
done using the harmonized
legal compliance
goods code,
and efficient
harmonized
running
goods
of an organization.
code system, which is an
human resource
internationally
records can be
standardized
maintained
system for
in two
classifying
formats. You have the
traded
manual
products,
and
each
electronic forms.
HS code has a corresponding duty rate assigned under the
human
East
resource
African
management.
Community Customs Management Act.
That whenever documents
So
are
the
created, for example,
HS
an
code
employee file is
can
open,
also determine the
now
amount
that employee
of
file will be used
customs
maybe
duty
to
to
assign
pay.
a number to deploy that
Classification
employee, and whatever communication that goes in relation to that employee
Then
is
we
put
have
in that particular
the
form.
East
Then when a decision
Africa
is not being
Community
made, that particular record is supposed to be
external
stored
tariff
and can be retrieved at a future date to
East
be able to at
Africa
least assist
Community
in decision making
external
as far as
tariff
human
can also
resource
determine the amount
management
of customs
activities
to
in an
pay.
organization
Kenya,
is concerned.
we know candidates
And
is
if
an East
proper
African
decisions have to be made
community
regarding
member state,
workers, then it is
and
also important
the East
that
Africa
an organization
Community
maintains an
external tariff
efficient system
applies to
of
Kenya. Hello and
human
welcome
resource
to the lesson.
records.
We continue to the
realize
external
the
tariff
objectives
and
of
taxation
this particular
currently
unit.
operates in position
We are
of
going to
customs
start
duty.
with
Bonded
the types
structure
of
in
human
Kenya.
resource
Imposition
records.
of with rates
customs
typically
types.
the topic is customs taxes and excise 0%
taxes.
at candidates in Kenya. The imposition of 25% and 10%, 0% 10% by and 25%.
So what are the various types of human
external
resource records
African Community
that may be
Customs
in
Management factor?
So the first one
Sensitivity of customs duty in Kenya is governed by East African Customs. Or let me just say sensitive. East Africa. Let me say East African Community
and when you talk about personal records, these are the records that will now have.
Now, candidates, we are highlighting factors. Hello, candidates. Amount of public custom taxation realization determined by several factors. One of them is
introduction to
sensitive items.
We are now moving to
there are certain goods that are deemed
which is the role of economic treasury
or social reasons
treasuries
that attract higher duty rates
in public finance
which can exceed the standard
25% the national treasury, and may even go up to 35% at the national or even higher for specific products as listed county in the East African external tariff. Kenya second schedule grant. So Kenya has also been granted stay in application of certain CET rates for specific products to protect local and control industries or even manage shared within the national treasury. So these are 4 factors that determine duty payable by the Constitution. Is customs values. Number 2, the harmonized each system code. Then there is a East African Community External Tariff, albeit distinct 4 role in ensuring the prudent factors and determine utilization of the amount of customs duty payable to the Kenya Revenue Authority.
Letters of deployment.
So that's the end of the lesson. Here, and in closing the lesson,
the employment record, when was this particular employee
that first of all, under imposition of customs duty,
their job,
the imposition of customs duty is primarily governed by the East Africa Community Customs Management Act and administered by Kenya Revenue Authority through its Customs and Border Control Department.
Then you also have
and the process of imposing and collecting customs duty in Kenya involves the electronic submission of import declaration by clearing agents to the Kenya Revenue Authority. It is done electronically. Just go to the KRA iTax portal and the Integrated Customs Management System. You go to the Integrated Customs Management System and do the application. You provide the supporting necessary documents such as commercial invoices, the bills of lading or airway bills, for example, the parking lease, and relevant licenses and permits have to be submitted as supporting documents. And then the KRA's Customs and Border Control Department is said is responsible for processing the declarations. It is responsible for verifying the goods, for assessing the applicable duties and taxes based on the customs value and classification, and also facilitating the payment and eventual release of cargo. That is the role of customs and border control.
Then you may also have what you call,
which is a body or department under KRA. It is responsible, number 1, for processing the declarations.
Now, these
number 2, it is responsible for verifying the goods. Number 3, this department is responsible for assessing the applicable duties and taxes based on the customs value and classification. And also number 4, it facilitates the payment and the eventual release
that the employee has done. For example, an employee has gone for a 2-week training.
You understand? And that is all candidates for today's lesson on imposition of customs
maybe institutions.
If you have any question, feel free to ask questions.
So that again becomes very critical.
Questions.
Then you also have what you call leave records. So
hello Lana, welcome to Manifested e-learning platform. My name is Emily Ngwiri. Today we are discussing business and data analytics, December 2024. The question of focus is question 23. Let's read together. Elimu Bazaar Foundation runs a group of secondary schools in the country. Among their schools is Masomo Bora High School. The schools are funded by school fees and partially sponsored by capitation from the government and donations from alumni and well-wishers. Masomo Bora High School is preparing the budget for the year 2025 with 3 terms commencing January, May, and September.
Another 10 days.
The following details relate to the budget preparation.
Leave record is retrieved. You look at the leave particular record and so on.
Estimates and, it will have 120 students
leave record
in Form 1, 110 students in Form 2, and 100 students in Form 3,
subject to approval of the supervisor,
and 100 students in Form 4.
The remaining leave days. Then you
the
may also
Form
have
1s will report in February 2025.
Occupational accident records.
The following is the fee structure that is payable by the parents per term. Form 1, 33,500.
Records.
Form 2, 36,500.
To the
Form 3,
Occupational Safety and Health Act,
43,500.
it is important
Form 4, 45,000.
within the human resource department,
parents are
or
usually
within the
required to pay
organization,
60% of the fee
records are
when
captured
the school
in relation
opens.
to
The balance at the
workplace
beginning of the next
accidents,
month, Form 1s pay
accidents,
60% when they
or
report
what you call
in February
near
and
misses.
40% in March.
If there were some mishaps,
Number 3,
and then according
the
to the
school
law,
receives a
this is
capitation
supposed to
of
be captured. So you may
16,000
also
per
have what
student
you
per
call
term,
occupational
which is received
accident
at the
records,
beginning of the
which
term.
indicate that these are the
Number
accidents
4,
that have
on
taken
average,
place within a
the
given
school
organization,
receives donations
or maybe
of
within a given duration of time.
2.5
You
million
may
per
also
month,
have what you
but
call
this reduces to 60%
promotion
when the school is closed.
promotion records.
Number 5, the school has
Now,
a
promotion
small
records,
farm
this
from
now
which it
kind of
generates
records
harvest
will
produce.
indicate
It is estimated that the produce generates
progression
200,000 per month. Number 6,
of
in addition,
employees,
the school
progression
hires
of
out
employees.
the bus
So
every
this will
weekend
indicate this
for
particular
events
employee joined
earning
this particular
60,000 per
during,
month,
say, the year
except in
2000.
December when the
By
bus
year
driver
2006,
is on leave.
had moved to this particular position.
Number
By
7,
the year 2008,
the school pays on
had
average
moved to a different
salaries and
position.
wages
Or
of
it may
6.2
also
million
indicate
per month,
that this kind of an
even
employee
when
or
the
this
students
category
are
of
closed.
employees have never been promoted
Number
for the
8,
last, let's say, 20
the school
years.
spends on
So that
average
again can
550,000
help in
on general
decision making.
consumables,
Then number
which
8,
reduce to
you may also
60%
have what you
when the
call
school is closed.
statutory
Number 9, the school
compliance
buys new textbooks and also replaces old ones at the
records.
beginning of every term
Now,
for
statutory compliance
650,000.
records.
Number 10, the
For
school
example,
provides meals
when
to
it
staff
comes
and
to
students
the payroll,
at an average cost of 1.5 million per
payroll,
month.
it is a requirement
This is catered
that
for
organizations
in school
maintain
fees
a copy of
and
the payroll
capitation.
in an
The amount
organization
reduces to
publicly.
40% when the school
So
is
you
closed.
would expect within the human resource department
Number
or
11,
registry, you have
electricity
statutory
and water
requirement
bills
records on
average
payroll. You
150,000
may
per
also
month
have on
and
taxation,
50,000 when the school is closed.
and
Repairs and maintenance
other
also amount to
returns.
250,000 per month and reduces
taxation
to
and other
40,000 when the
returns.
school is
So
closed.
these records may
Number 12,
be captured.
the
may be
school plans
stored
to buy
as a
additional
result of
learning and staff
compliance
equipment of
required
1.5 million in
any
January
given
and
organization.
replace
And
old
Lana,
furniture at a
it
cost
is
of
also
2
important
million.
to note that
In May,
when it
the
comes
old
to
furniture will
working
be scrapped
environment,
at 200,000.
attendance is very
Number
key.
13, the school has a
Attendance
loan
records.
for which it will pay annual installment of
Attendance
2
records.
million
Now, when
and
it comes
interest
to
of
decision
200,000
making,
in
for
December.
example, issues relating to pay,
Number 14,
employees are
the
paid
school
maybe in
estimates
terms
that it will
of
have
time
cash
worked.
balance of 5.5
Time
million
worked.
on
And
1st
what some
January
organizations have
2025.
done, you may have
Required.
manual
Prepare
registers
a cash budget for the
manual
year
registers,
ended 31st December 2025
or other organizations
on
have
a
moved what you call
month-by-month basis
biometrics,
and also for the whole
where the
year.
attendance of employees is captured by
So
electronic
what we're going to
means,
do, ladies and gentlemen,
and hence
we're going to
the issue
move
of
towards the
attendance,
right. Here, as usual,
attendance records that
and
capture
then
the
we're going
attendance
to
of employees
now
to
bring
ensure
forth
that
or
when
break
decisions
down
are supposed to be made
in
regarding
form of an analysis per
employees,
month
then that
what we'll be talking
becomes
about, what Form 1, the
possible.
number of students,
So this
and
could also
also
be
the
some of the
fees
records. You may
that are
also
going to
have
be paid per student.
benefits register.
Let's dive right in. So here we have
benefits
January.
register or records. Now, what you notice, dear Lana,
Like
some
that.
organizations
And we're saying we're
may,
preparing
for
for
example, provide
which
housing.
year? For this as a 31st
housing
December 2025. So we will begin
or
by
transport.
January. So just come over here and say Jan
Transport for employees.
hyphen
So
25.
you may have the benefits records indicating if the organization has,
and then
for
February
example, 200
hyphen
houses
25.
Where they have housed
Not like that. We're just going to
their
say
employees. Then you
we're going
may
to put
have a benefits records that says for
Jan,
the purpose of housing, the following 200 houses have
Jan
been allocated to our employees,
5.
and these are the employees who are staying in those particular houses
And you're going to put
as a record
Feb
to be able to now know and
25.
manage or make decisions when it comes to
Feb
reallocation, among other issues,
25.
for purposes of fairness and so on. So these are just some of the types of records
So when you
So
have
I'm
may
going
be
to
Jan
the
maintained
brushes I use and how I use them.
regarding human
First, I have
resources.
a two-layer
They
Not
may be
following,
maintained manually or electronically. So,
that.
gray.
what is the purpose?
I'm going to start sketching
We have
with
looked at the
things.
type
Come
of
over, you
records,
just
but the
blue
question
and
then
just
is,
come.
100%
what is the
opacity,
purpose
100%
of
flow.
human resource
This is my sketch.
Jan,
I'll show you what the
human
settings
resource
are. It's very
records?
simple.
25.
Spacing
Purpose,
standard.
That. So this is what I'll do. I'll come to
force,
custom,
size, jitter,
come to
pin pressure.
more number formats, and I'll look at just the year.
In today's video, I'm going to show you how to add a thumbnail to your Facebook live stream the new way. Recently, Facebook did some update, and before you can add in thumbnail to your Facebook live stream through Meta Business Suite. But now they have updated it and you can no longer add in thumbnail. So immediately you go live on Facebook. To add a thumbnail, open a new tab and go to your Facebook page. Next, refresh your Facebook page so you can be able to see the live video. Next, scroll down to the live video over here. Then next, click on the three dot icon over here. Click on edit post. Next, click on video options. Once you click on video options, next, scroll down and you will see change thumbnail. Once you click on change thumbnail, you'll be able to click on upload thumbnail. And from
you have employed an employee in an organization,
visible
and
by,
this employee has given you
is it divisible by 3? So it should be a leap year. 2025 should be.
So supposing for one reason or the other, the employee is not
so
there,
how you just determine
then
that
it means you are able to use this information
3
maybe to contact
over 4.
the next of kin
not divisible
of
by
this
4, so
particular
just
employee.
that. So
Then you
talk
also
about,
have
is it divisible by 8? So it should be a leap year. 2025 should be
so suppose
25. So just putting the end of
my
March,
next of kin
not divisible by 4. So
particular
first March that. So
then you
talk
also
about
proper records. Then you can see
if you are using the all the way 25, it should be
so suppose
25. So just putting the end of
my
March,
next of kin
not divisible by 4. So
particular.
first
If you are
March that.
using
So
this, then you also have proper records. Then you are now saying if you are using the all the way 25, so easy. So suppose it what is putting the end of my 5 kin then you also proper able to then you are now saying if you are using the all the way 25, so easy. So suppose what is putting the end of my 5 kin then you also proper able to then you are now saying if you are using the all the way 25, so easy. So suppose what is putting the end of my 5 then you also proper able to then you are now saying if you are using the all the way 25, so easy. So suppose what is putting the end of my 5 then you also proper able to then you are now saying if you are using the all the way 25, so easy. So suppose what is putting the end of my 5 then you also proper able to then you are now saying if you are using the all the way 25, so easy. So suppose what is putting the end of my 5 then you also proper able to then you are now saying if you are using the all the way 25, so suppose what is putting the end of my 5 then you also proper able to then you are now saying if you are using the all the way 25, so suppose what is putting the end of my 5 then you also proper able to then you are now saying if you are using the all the way 25, so suppose what is putting the end of my 5
past paper question that was tested in December 2024. So candidates, welcome to the lesson. Those are our lesson objectives. By the end of this lesson, you should be able to explain the meaning of bond refinancing, you should be able to outline the factors considered in bond refinancing decision and also reasons why companies refinance bonds. Then you should be able to work out any computational question associated with bond refinancing. So first of all, we define what is bond refinancing. So bond refinancing is the process of issuing new bonds to pay off existing bonds. If a company issued new bonds 5 years ago, it may choose to refinance by issuing new bonds. And the primary goal is usually to reduce the company's interest expenses, because companies that issue bonds are required to pay interest on the bonds. And this is often done when interest rates have fallen since the original bonds were issued. And there are various factors in bond refinancing. So let's highlight some of the factors. Factors in bond refinancing. Factors. So get it clearly first, candidates, that bond refinancing involves replacing existing bonds with new bonds. That's the definition. So what are some of the factors in bond refinancing? The first key factor is interest rates. Interest rates. This is the most significant factor, because if current interest rates are lower, today's interest rates, if they are lower than the coupon rate on the existing bonds, then refinancing can lead to substantial savings. That is a significant factor. The second factor is call provisions. Call provisions. Many bonds have what we call call provisions. These are provisions that allow the issuer to redeem the bonds before maturity. However, before redeeming such bonds, the company may need
over here. Then next, click on open a new tab and go to your Facebook page. Next, refresh your Facebook page so you can be able to see the live video. Next, scroll down to the live video over here. Then next,
transaction costs. There are costs that are associated with refinancing bonds. Issuing new bonds involve costs such as underwriting fees, such as legal fees, and other expenses. And such costs must be weighed against the potential interest payments, such that if the potential interest payments exceed the costs associated with bond refinancing, then the company can go ahead and do bond refinancing. The fourth factor is time to maturity. It's a factor to consider. Time to maturity is a factor in bond refinancing. Time to maturity, the remaining time of maturity of the existing bonds. Time to maturity of the existing bonds, the remaining time, and also the time or the maturity of the new bonds may influence the refinancing decision. Time to maturity. 5, company credit rating. The credit rating of the company that is issuing the bonds, because an improved credit rating can allow a company to issue new bonds at a lower interest rate. Then finally, market conditions.
open a new tab and go to your Facebook page. Next, refresh your Facebook page so you can be able to see the live video. Next, scroll down to the live video over here. Then next, click on the 3-dot icon over here. Click on edit post. Next, click on video options. Once you click on video options,
the ease and the cost of refinancing. So these are factors in bond refinancing. 6 factors. Number 1, interest rates. Number 2, call provisions. Number 3, transaction costs. Number 4, time to maturity. Number 5, company credit ratings. And 6, market conditions. The next question we need to answer in this lesson is why bond refinancing? We need to answer the question why. Why issue new bonds to pay off existing bonds. That's the question we want to answer. Why bond refinance? Why? The first reason is related to the first factor here, which is interest rates. The first reason, key reason, is to reduce interest rates. To reduce interest rates. To reduce interest rates. This is the common driver of bond refinancing. The common driver. The common reason. This is what drives bond refinancing. When market interest rates fall below, when market interest rates fall below the coupon rate of the company's existing bonds, then refinancing allows the company to issue new bonds at a lower interest rates, thereby reducing interest payments. And that can translate to significant interest cost savings over the life of the bond to reduce interest rates. 2, to extend maturity. To extend maturity. To extend maturity. Refinancing can be used to push back the maturity date of debt. To push it back. And that provides the company with more time to repay the debt, which may improve its cash flow and its financial flexibility. And that is especially beneficial if the company anticipates future cash flow challenges. Extending maturity. We're moving on to the third reason why companies bond refinance. And that is especially beneficial if the company anticipates future cash flow challenges. To extending maturity. Third reason, bond. Why companies bond refinance. To and change bond covenants is to change anticipate future cash flow challenges. Bond covenants are agreements between the bond issuer and the bond maturity. Third reason that restricts certain actions by the issuer. So refinancing offers an ability to renegotiate these actions. Potentially improving the restrictive bond covenants are agreements extending or adding maturity. Third reason that restricts certain actions by the issuer. So refinancing offers an ability to renegotiate these actions. Potentially improving the restrictive bond covenants are agreements extending or adding maturity. Third reason that restricts certain the bond issuer to carry out certain actions. So during refinancing, these covenants can be altered. Now, the fourth reason is to improve financial flexibility. To improve financial flexibility. Bond financing is carried out to reduce to improve financial flexibility. Because by reducing the debt service costs, by reducing the interest payments, and extending maturity. Hello and welcome back to the lesson. We will continue with the subject public finance and taxation. Today we are studying imposition of customs duty in Kenya. Imposition of customs duty. The topic is customs taxes and excise taxes. And candidates in Kenya, the imposition of customs duty is primarily governed by East African Community Customs Management Act. The imposition of customs duty in Kenya is governed by East African Community Customs Management Act, East African Community Customs Management Act of 2004. And this is a regional legislation which provides an overarching framework for customs procedures and administration across the East African Community partner states, including Kenya. So the Kenya Revenue Authority, specifically its Customs and Border Control Department, is the principal body that is responsible for the enforcement and collection of customs duties in the country. So this customs duty is administered by KRA through its Customs and Border Control Department. The overarching framework, the laws are governed, or they are we get the laws from the East African Customs Community Customs Management Act, but it is administered by KRA through its Customs and Border Control Department. So the customs duty is levied on goods imported into Kenya, with the core objective being revenue collection for the government and the protection of domestic industries. So the amount of customs payable is determined by several factors. The amount of customs paid is determined by several factors. Payment of customs duty, the amount, is determined by several factors, one being the customs value. The customs value. This is generally based on the price paid or payable for the imported goods, including the cost of the goods, insurance, and also freight. So the value of the goods determines the customs duty or taxes to be paid. Then we have classification of goods. Classification of goods. Goods are classified using the harmonized system, what we call HS. Goods are classified based on using the harmonized goods code. Using the harmonized goods code, the HS code. Classification is done using the harmonized goods code. Harmonized goods code system, which is an internationally standardized system for classifying traded products. And each HS code has a corresponding duty rate assigned under the East African Community Customs Management Act. So the HS code can also determine the amount of customs duty to pay. Classification of goods. Then we have the East Africa Community external tariff. 3. East Africa Community external tariff can also determine the amount of customs to pay. Kenya, we know candidates is an East African Community member state, and the East Africa Community external tariff applies to Kenya. So the community external tariff currently operates on bonded structure with rates typically at 0%, at 25%, and 10%. 0%, 10%, and 25%. The external tariff. Then the fourth factor is sensitivity. Sensitivity, or let me just say sensitive. Let me say sensitive items. Let me be specific. Sensitive items. Now, candidates, we are highlighting factors. The amount of customs duty payable is determined by several factors. One of them is sensitive items. There are certain goods that are deemed sensitive for economic or social reasons that attract higher duty rates, which can exceed the standard 25% and may even go up to 35% or even higher for specific products as listed in the East African Community External Tariff, second schedule. So Kenya has also been granted stay in application of certain CET rates for specific products to protect local industries or even manage supply. So these are 4 factors that determine duty payable. 1 is customs value. Number 2, the harmonized system code. Then there is a East African Community external tariff. Number 4, sensitive item. These are key factors that will determine the amount of customs duty payable to the Kenya Revenue Authority. So that's the end of the lesson, candidates. And in closing the lesson, it's important to appreciate that first of all, under imposition of customs duty, the imposition of customs duty is primarily governed by the East Africa Community Customs Management Act and administered by Kenya Revenue Authority through its Customs and Border Control Department. And the process of imposing and collecting customs duty in Kenya involves the electronic submission of import declaration by clearing agents to the Kenya Revenue Authority. It is done electronically. Just go to the KRA iTax portal and the integrated customs management system. You go to the integrated customs management system and do the application. You provide the supporting necessary documents such as commercial invoices, the bills of landing or airway bills, the parking lease, and relevant licenses and permits have to be submitted as supporting documents. And then the KRA's Customs and Border Control Department, we said, is responsible for processing the declarations. It is responsible for verifying the goods, for assessing the applicable duties and taxes based on the customs value and classification, and also facilitating the payment and eventual release of cargo. That is the role of Customs Border Control, through which is a body or department under KRA. It is responsible, number 1, for processing the declarations. Number 2, it is responsible for verifying the goods. Number 3, this department is responsible for assessing the applicable duties and taxes based on the customs value and classification. And also number 4, it facilitates the payment and the eventual release of the cargo. You understand? And that is all, candidates, for today's lesson on imposition of customs duty. If you have any question, feel free to ask the questions and we will answer all questions. Bye-bye.
Hello learner, welcome to Manifested e-learning platform. My name is Emily Ngwiri. Today we are discussing Business and Data Analytics, December 2024. The question of focus is question 23. Let's read together. Elimu Bazaar Foundation runs a group of secondary schools in the country. Among their schools is Masomo Bora High School. The schools are funded by a school fees and partially sponsored by capitation from the government and donations from alumni and well-wishers. Masomo Bora High School is preparing the budget for the year 2025 with 3 terms commencing January, May, and September. The following details relate to the budget preparation. Number 1, the school estimates it will have 120 students in Form 1, 110 students in Form 2, and 100 students in Form 3, and 100 students in Form 4. The Form 1s will report in February 2025. The following is the fee structure that is payable by the parents per term. Form 1, 33,500. Form 2, 36,500. Form 3, 43,500. Form 4, 45,000. Number 2. Parents are usually required to pay 60% of the fee when the school opens. The balance at the beginning of the next month. Form 1s pay 60% when they report in February and 40% in March. Number 3. The school receives a capitation of 16,000 per student per term. which is received at the beginning of the term. Number 4, on average, the school receives donations of 2.5 million per month, but this reduces to 60% when the school is closed. Number 5, the school has a small farm from which it generates harvest produce. It is estimated that the produce generates 200,000 per month. Number 6, in addition, the school hires out the bus every weekend for events earning 60,000 per month, except in December when the bus driver is on leave. Number 7, the school pays on average salaries and wages of 6.2 million per month, even when the students have closed. Number 8, the school spends on average 550,000 on general consumables, which reduce to 60% when the school is closed. Number 9, the school buys new textbooks and also replaces old ones at the beginning of every term for 650,000. Number 10, the school provides meals to staff and students at an average cost of 1.5 million per month. This is catered for in the school fees and capitation. The amount reduces to 40% when the school is closed. Number 11, electricity and water bills average 150,000 per month and 50,000 when the school is closed. Repairs and maintenance also amount to 250,000 per month and reduces to 40,000 when the school is closed. Number 12, the school plans to buy additional learning and staff equipment worth 1.5 million in January and replace old furniture at a cost of 2 million. In May, the old furniture will be scrapped at 200,000. Number 13, the school has a loan for which it will pay annual installment of 2 million and interest of 200,000 in December. Number 14, the school estimates that it will have cash balance of 5.5 million on 1st January 2025. Required: prepare a cash budget for the year ended 31st December 2025 on a month-by-month basis and also for the whole year. So what we're going to do, ladies and gentlemen, we are going to move towards the right here as usual, and then we are going to now bring forth or break down in form of an analysis per month what we'll be talking about, what Form 1, the number of students, and also and the fees that are going to be paid per student. Let's dive right in. So here we have January like that. And we are saying we are preparing for which year? For this as a 31st December 2025. So we will begin by January. So just come over here and say Jan-25 and then February-25. Not like that. We're just going to say we're going to put Jan 25. And you're going to put Feb 25. Feb 25. That. So when you have Jan 25, so it's not following through like that. So we come over, what we do, just come like this. Jan 25. That. So this is what I'll do. I'll come to custom, come to more number formats, and I'll look at just the year. I'll look for the year and the month. This is day, month, year. This is day and month. I want the year. So we scroll down here. Over here. not 1st Jan, not so we just talk about 31st Jan 2025. So we're just going to talk about the end of the month. So you're going to talk 31st Jan 2025. Then here we talk about 28 or 29 days 2025. So 2025 is not divisible by, is it divisible by 3? So it should be a leap year. 2025 should be, is it a leap year? So 20, so how we just determine is that 2025 over 3 over 4. It's not divisible by 4, so just delete that. So talk about 28 Feb 2025. So you're just picking the end of months. So it's not 31st March, and it's picking now the way I wanted it to pick. So I want to go all the way to December. Let's see, when I highlight like that and just express it like that, expand it, that. That first 2025. So once we have that, then we can then proceed on to look at the information that is given to us over here. So we're talking about, we'll need to analyze point number 1 over here together with the fees. So point number 1, the school estimates it will have 120 students in Form 1, 110 students in Form 2, 100 students in Form 3, and 100 students in Form 4. The Form 1s will report in February 2025. So here, we've not been told, I'm just preparing this as at the end of the month over here, but we are saying that obviously if they report in first, it's the 1st of February 2025 over here. So allow me to use just that format over here. So I may need to put it in that format, like that. Allow me to put it in that format so that now it can at least be much better, give better visuals here. So now we're saying that the number of students, we can just analyze over here number of students over here. The number of students, and we're saying that we'll create a gap right over here, insert, right over here. And the number of students will have to type Form 1 through to Form 4. Form 2, like that. Form 1 to Form 4. And then we'll also need to analyze the fees per student. Fee per student. So I just maybe perhaps insert here. Just drag it down here. Fee per student. So I'll just copy this right over here. So copy and just put right down over here like that. And once we have that, then we go to the information or the details that relate to the budget preparation. The school estimates 120 students in Form 1. So here we are told 120 students in Form 1, 110 students in Form 2, 100 students in Form 3, 100 students in Form 4. But we've been told that Form 1s will report in February 2025. So what happens is that when we come to this information right over here, we are saying that Form 1, there's nothing to do with January right over here. We'll expect 120 students there in February. And also in March, we'll also expect 120 students in March. For Form 1, that is. So because we've been told that the 120 students, Form 1s will report in January 2025, we will now proceed on to see when the months actually, the term dates actually are. So we move on to the beginning with the 3 terms commencing January, May, and September. So we'll do the same for May over here. So here is going to be, of course, the holiday. So we'll proceed on to put 120 students. And June, 120. That. So in July, we're not going to have them. August, we're not going to have them, because this is going to be the holiday. So September and October, we're also going to have the same students. So we're saying that with the 3 terms commencing January, May, and September. So September, so you said now we go to September. So this is May and September. So 120, 120. That. Let's just make sure that the Form 1s will report in February. Following the fee structure that is payable parents per term. So now let's analyze, first of all, we finish off this part in part 1, or this segment that relates to part 1 over here. So 120 students in Form 1. Now we do 110 students in Form 2. And those ones come in January. So Form 2, 110. And also in February, 110. There. In March, we've not been given any information about March. Right over here. So we will do the same also for the semesters in May. So here it's going to be 10, 10. Here is 10 and 110. 110, 110. Form 3s, let's see, they don't have an issue for Form 3s. 100 students in Form 3 and 100 students in Form 4. So the same for Form 3 and Form 4. Form 3 is 100 and 100. That. So we just drag those ones like that. And then here we put in 100 and 100. And then over here we put in the same. Like that. Now let's analyze the fee per student. So the school estimates 120 students. This one we've analyzed. The following fee structures is payable by the parents per term. 33,500 in Form 1, Form 2, 36,500, Form 3, 43,500, Form 4, 45,000. So we are saying that in Form 1 is 33,500, but we are saying that they join in when? When do they join? They join in February. So per parent per term. So here we have 33,500. Like that. And here we have 33,500. Per term. Let me just understand that. The following is the fee structure that is payable by parents per term. Like that. Parents are usually paid 60% of fee when the school opens, and the balance at the beginning of the next month. So here is 33,500. That is going to be like that. And you are saying 33,500. Let me just put it like that first. And then for Form 2, we are saying is going to be how much? Here is the information. 36,500. And you're going to do it over here in January. 36,500. That Form 3 is going to be 43,000. Here's Form 3, 43,500 and 45,000. 43,500 there and 45,000. Like that. Then we are saying that this information is going to be done the same now in May. Over here. Let me just confirm one thing. The parents are usually paid 60% when the school opens, the balance at the beginning of the next month. Over here. So here, the school opens in May. Over here, we expected to pay the same. So in May, it's just going to be that value. And then this one is just going to be that value. That. Just drag it down. Drag it down like that. I'm just putting the fees, the total fees when they're supposed to be. The breakdown will actually be done when we create the cash budget. This is just the preliminary information that I'm just putting over here to at least make sure that this information is broken down and synthesized easily. Now let's go to the September semester, or the September term rather. So here we're saying is just going to be 33,500, that one there. It's going to break it down like that. There. So now, once we have that, then let's prepare the cash budget, because what we've been informed right here down, prepare a cash budget for the year ended 31st December 2025 on a month-on-month basis, and also for the whole year, like that. So this is the preliminary information put right over here. We will be able to break it down like I've just mentioned earlier on. So I put the comma format and then 2 decimal points like that. That's what I need. Show the cash budget. So here we come cash budget. Cash budget will have the receipts and will have the expenditure or the payments there. So the cash budget begins by looking at the years, of course. That, shift to there, control R. And then, because we are seeing that these ones are going to be in thousands, like that. Center like that. So we put these ones also like that until December. Thousands. And then we start it out. Balance at the beginning. We've been given balances that are supposed to be there at the beginning. So balance at the beginning. At the beginning. Put it in the short form like that. And let's look at it together. This is the electricity and water bills, the plans to buy additional. These are the information that's right over. The cash budget is what you've been told to create. The school estimates to have a cash balance of 5.5 million, like that. So once we have 5.5 million as on 1st January 2025, we can just come right over here and say that here, because it's in millions, 5,500. That's at the beginning there. And this one is, of course, note number 14. Please let me just put it note number 14. Let me just allow me to put it maybe somewhere just beside it over here. I can just insert here, insert, so that I cannot perhaps become mixed up. This is note number 14 over here. Or I don't have to do it like that. I can just put inside a comment, insert a comment, insert, right click. I right click over here, insert a comment over here and say note number 14. Note 14. That. So that when you hover like that, you can see it's note number 14 there. And then once we have that, we now analyze now the receipts right here. Receipts. Control B. And you're seeing that the receipts, we'll start by saying the fees right over here, fees. Like so. And we start by putting from Form 1 through to Form 4. So copy. Like that. And we can see that for Form 1, we don't receive it in January. Why? Because they join at this point over here. So Form 1, we are saying they join in February. And we are saying that we will need to first of all pick, saying that the school estimates it will have 120 students in Form 1, 110 students in Form 2, 100 students in Form 3, 100 students in Form 4. The Form 1s will report when? The month of February 2025. So we will pick the 120 students times this fee, but it will not appear in January. It will appear when? In February, when they actually join over there. Additionally, we need to also consider note number 2. The parents are usually required to pay 60% of the fee when the school opens and the balance at the beginning of the next month. That is, Form 1s pay 60% when they report in February and 40% in March. So, what I'll do, I will pick the fee, which is 33,500, and multiply that with the number of students when they join. And then I'll multiply 60% because you're supposed to pay 60% times 0.6, which represents 60%. And because I want it in terms of thousands, why? Because I've put that in terms of thousands, I divide by 1,000. That's what I get there. Now the balance of 40%, this is 60%. You can see it's 60%. The 40%, why I'm putting the 120 over here, students will still be in March over here. They will still be there. So if I drag it across, I drag, or I do it like this. I pick 33,500 and I multiply with the number of students there, which will still be in March. I'm saying because they joined in February, times 0.4, that's the 40%, divided by 1,000. I get that. That is the balance fee that they're actually being paid over there. So I don't need even to have this column over here. So just delete it, that there. Even these ones, we may not necessarily need them right over here because they're just going to be the students when they join, like over there. So I just deleted those ones over there. I was just putting them over there so that now I can be able to see maybe, or in terms of computation, how I'd be able to compute them like that. This is when the Form 1 students join. So we can be able to put over here